Let's dive into the common pitfalls for novice property investors and how to safeguard your finances in real estate. For more, I'm joined from Sydney by Gianni Musumeci from Leverage Property Advisors. Gianni, great to have you on Ticker. What are the current market conditions that investors need to be aware of at the moment?
We're really seeing growth ramping up in a number of the capital cities. In all capital cities apart from Canberra, it's the lowest quartile of house prices that are performing the best. Capitals like Brisbane, Perth and Darwin achieving growth of 7 to 8% over the last quarter, and they're in the lower 25% of values as well. When we look at rolling quarterly values, growth in Adelaide and Hobart capitals are really ramping up, showing signs of increasing growth and increasing demand on property. And in terms of future market conditions, given the fact that the federal government has committed to 1.2 million homes by 2029, the Master Builders Association has actually advised that we're falling short of this target, and we now need to deliver an average of over $255,000 per annum to achieve that target.
Gianni, there has been so much talk, obviously during the election over the past year as well, about the housing crunch. So many people are feeling it, not to mention that this year we're expecting interest rates to go up. So talk to us about how that 5% low deposit scheme is actually affecting house prices. Is it having the impact that we've been worried about?
Well, the shortfall in supply, let alone, will no doubt create pressure on house prices. But the low deposit scheme has actually increased the demand on housing. And we've seen a sharp lift in the volume of owner-occupied loan commitments over the last quarter to just under 60 billion, 58 billion according to Totality. This, in addition to investor lending, which has crept up to just under 40 billion, has seen more competition between owner-occupiers and investors as we compete for a shortage of supply of property.
It's a fascinating time. Talk to us, I guess, about some of the strategies that you recommend to people for successful investment properties, because there's a lot of confusion.
Yeah, look, I feel that a lot of people, especially amateur investors, they go out there and they just buy any property in any area. They make a lot of errors in terms of bias and commitments. What I suggest is people start with their goal and work their way backwards, whether it's a cash flow goal or a capital amount that they're looking to achieve, and work their way backwards to their current position. And the strategy will actually present themselves. I see a lot of low to middle income earners, they negative gear in terms of investment strategy, which is actually a deficit in their cash flow. And then I see a lot of high income earners buying cash flow positive properties, which actually increases their income tax liability at the end of the financial year. So it's all about having an investment property strategy that is fit for purpose.
Yeah, very much so. What are some of, I guess, the red flags that amateur investors need to watch out for, though?
The big one is to remove emotion. And a lot of people go in with two frames of mind. I want it to be an owner-occupied property and then treat it as an investment down the track. Or they think that, oh, I wouldn't particularly live in this house, where they need to sort of understand the demographic of the area and the actual customer, if you would, that is going to live in that property or buy it off them down the track. So that's the first one, to remove emotion. The second one is to have a clear goal in mind, not just to buy any property that they see or the first property they see. They want have a clear goal, and they're buying an investment property to get them from point A to point B financially, and that needs to be really articulated as a goal. And then lastly, financial literacy is really key when it comes to buying an investment property. So understanding the upfront costs and ongoing cash flow needs of purchasing a property, so that they're not overcommitting themselves up front, or they don't fall into too high a deficit going down the track when it comes to owning a property. They're some of the red flags that I see amateur investors making when it comes to purchasing property.
Yeah, it's fascinating because we talk about location as you have, and the old adage of location, location, location. Do you think that is still the case?
Yeah, definitely. You really need to understand the data and look at those areas that have diminishing supply and increasing demand, and look at those leading indicators that provide you that forecasting data to show you where you should be buying and even the type of property that you should be buying.
And obviously, if you're having a look at buying an investment property where you're looking to get renters, you're going to be needing to take into account things like infrastructure spending in the area and the unemployment rate and jobs and things like that, right?
Yeah, definitely. We look at employment rate. We want to see that an area has a good, consistent increase in employment, which then leads to population growth, which then leads to infrastructure projects to cater for that population growth as well. And infrastructure spend is also a driver of population as well, because with that infrastructure comes employment and comes that population growth, and then comes that need for housing to cater for that population growth as well. So it's all a cycle of growth.
And just before we go, how can people find out more about Leverage Property Advisors?
You can reach out to me via my socials, all at Leverage Property Advisors, or you can head to my website, leveragepropertyadvisors.com.au.
All right, Gianni Musumeci, it is a big year ahead. Always great to have your insights on Ticker. Thanks for your time.
Thank you so much.